It's the end of the world as we know it.
The S&P 500 is going to fall down like 20%.
What's going on, everybody? Michael Silva here. You're watching the Stock Market Brief Show. Today's episode is just, if we do see a September sell-off, where are some areas that we can look for to buying the dip? So we're going to look at some key levels and give you just a little bit of input, some interesting things that I see taking place with gold right now, and then also Bitcoin. Yes, crypto. I'll talk about it in today's episode. So yeah, it's not the end of the world. This is just looking at the September from last year. Hey, perhaps we see something like this where we get this relentless rally squeeze to the upside, and then we get this panic sell-off, and then we rip up to more new highs. Hey, it's anybody's bet, but we got a lot to talk about in a short period of time. Let's get into today's show. All right, everybody, welcome back. So we're looking at the S&P 500. The goal here is to determine where, if there is a September sell-off, a lot of people are thinking that there's going to be a sell-off, but yet the market's at all-time highs right here. Yeah, we're butting up against resistance in this trend line. It's really just an inside trading day that we're seeing across a couple indices. A little bit of a volume uptick right here. Hey, perhaps that's more hedging taking place going into September. Keep in mind, next week, it's a holiday week, and typically what that means is lower volume. And when you have low volume and you can get like these drifts up, like for example, in August right here, right? The volume's tapering down, but we're getting this relentless drift up higher. So that's always a possibility, but we want to map out key levels just in case if there's a bam, panic sell. Where can we potentially look? Well, right out of the gate, there's two areas that I'm going to be keeping an eye on. Short-term 20-period moving average, that's right at around 4475. Okay, that could be a quick hit, and then we might bounce from that area. But a more profound one would be back to the 50-day moving average. What do you know, right? We come down there, we tag it, we bounce. We tag it, we bounce. We tag it, we bounce. That's in confluence with the lower Bollinger Band on the daily time frame. Now, you can also draw out the daily time frame like so. This could be a big rising wedge taking place dating back from when? Well, last September, right? That's really where that August peak was, and then September sold off. We bounced, then we came back down. That was a very choppy period there. I remember it well, but like just take a look here. It's not only in confluence with the 50-day period moving average and also the lower Bollinger Band, but the lower range right here, I mean, that could just simply come down to around 4,400, 4,300, just right in that area, and that can tag as an area of support and potentially even head higher. Now, if we crack down through that, where do we look? Well, let's look at the 100-day moving average, and the 100-day moving average would be at 4,287. And if it goes even lower, we have this previous swing low right here, right at around 4250-ish right there, okay? But let's look at a monthly time frame, right? We just ended the month. September is here. You know, August was anything but boring, really. We are disconnected completely from what? The monthly 5 EMA, and the monthly 5 EMA is going to obviously uptick next month. We haven't had a down month for, actually, let me see. So 1, 2, 3, 4, 5, 6, 7 months of pretty much straight up action. Not too bad. That's up like what, 20%-ish for 2021. It's pretty cool. Complete disconnects from the 5 EMA. So where's the 5 EMA going to be? Well, let's say it's going to be around 4,300 right now, maybe 4,350. We'll see where it goes in tags. But that right there falls in confluence with where? Well, right here in this area too. So if we do get a kind of a September sell-off, I do see this as still bouncing potentially. And then honestly, I mean, the trend would remain, that could continue unless something really does crazy happen. But that would only be a 5% pullback from that area. And we haven't actually had a 5% pullback for, I don't even know how long, a year maybe, since last September? No, this had to be sooner than that. Actually, let me see. That wasn't even a 5% pullback, if I'm correct. I think we have. It's been a while since we had a 5% pullback. I'd have to look that up. I can't do that on the spot and just know. But then what would a 10% correction be? Well, that would bring us roughly to around 4,100, 4,000 to 4,100, that zone right in here. And that would take us to where? Well, it wouldn't be too far from the 100-day moving average. Okay, so there's a lot of confluence areas of support here. The trend remains extremely bullish. It doesn't show signs of the end of the world, but you know, panic could ensue, and when panic hits very hard, and it can fall very quickly. But that's why we have to map out key levels, because if it happens, instead of just finding out why it happened, know where you're going to be buying just in case if it does, and you can set up quality risk to reward trades. All right, S&P 500 on the quarterly time frame. I mean, look where we're at, like all-time highs, right? And we're outside of the quarterly Bollinger Band. You know, that's pretty intense. Typically what happens is they revert back to their means. The 5-day, the quarterly 5 EMA is where? Well, at 4,029. So that would also act as a very strong area of confluence. If we just get some pullback to 4,000, which would be insanity, right? That'd be losing, 500 plus points. And that would be a very, Armageddon type thing. But if you pay attention to these charts, you will know this ahead of time. Very similar to that gold trade that we posted on Twitter that I talked about previously. We mapped out that level, and as soon as it hit in the overnight session, bam, buy signal, bakoom. Now, what do we got going on in a couple of indicators? Well, negative divergence still here in the advanced decline line. This could mean a couple of things. One, could resolve to the upside, or could resolve to the downside, right? If this breaks out and starts cranking up to all-time highs, I mean, that can give us a big breath move for the S&P 500. So yeah, we typically see volatility in September, but we haven't seen it yet, because, well, it's still August 31st. So we'll see what comes. We have a negative divergence on the NIMO as well. This is a Nizam-McClellan oscillator. And, it's just floating positive breath right here. Still a little bit of a negative divergence as we're all-time highs. You'd think that you'd get some big breath push, but we haven't got anything like that. So we'll look at this for oversold and overbought areas. And another breadth indicator here is the percent of stocks above the 200-day moving average that make up the S&P 500, right? So how many stocks in the S&P 500 are above the 200-day? Well, it's relatively high, 81%, right? That is relatively high. However, it has been diverging as the market continues to press higher. Why is that? Well, the market's controlled of 5 to 7 stocks, 5 to 10 stocks, somewhere around there, right? There's these big mega cap FANG stocks. Don't need to talk about that much more. The VIX is forming a little bit of a falling wedge right here. All right, so perhaps, as it coils up and gets tighter, we might get a little pop above. And if you zoom in on the 30-minute time frame, you can see that structure a little bit more tighter. We'd have risk to the downside if we, obviously, for the S&P 500, if it breaks out, that would be risk to the downside for the S&P 500 if this goes up, right? It's the kind of works the opposite. If this goes up, spikes up, you'll typically see the S&P 500 fall. This is like a fear index, right? So potentially go and fill this gap right at around 1850. If we do get a spike up there, hey, that could be a potentially good intraday trade, right, for various S&P 500 stocks. Because if it spikes up here and it holds as an area of resistance, and then it might start drifting back down. The risk still going into a holiday week, though, is that we crush down and we fill this gap below us, which means the S&P 500 levitates higher. Now, XVG, the value line index, right, this has been diverging as well, and I want to call out something. We did break out of this downsloping trend, but now we're up against this area of resistance right at around 675. As it comes down there, it gets rejected. Came back up, got rejected. Came back up. Now we're back above the 50-day moving average. That's positive. Back above this trend line. That's positive. And, we're holding right in that area. So if we start breaking to 675, that to me signals some strength coming in, and we should see that within the S&P 500 too. However, if this starts to fall back down below the 50-day and come back down here, and if this still drifts up, then I'd be very, very hesitant. But if this starts falling down, I would imagine we can see this consolidator pull back here slightly too as well. And then we look at transports. Transports aren't looking all too hot. They looked hot when they broke out, right? We saw a little big, uptick. We back tested. We started pressing up higher. Now we're back below the 50-day moving average. And I drew out, you can see here, these dashed lines. Could be potentially bear flag. I mean, it is a bull channel right here, so maybe we tag it, start heading higher. Possibility. But notice how the industrials are just right around at all-time highs. Meanwhile, transports haven't caught up quite yet, and that's a very important thing to see them work hand in hand if you follow Dow theory. Take a look at oil really quickly. Look at oil, made a huge run up, all right, and then what happens typically is like, okay, now I'll buy in, and then you typically see some weakness. We've been saying, let's let it digest, see what happens. Hanging man candle, saw some follow through to the downside. I say if we get below 67 or 66, more than possible to come test this 62 low again. As it stands right now, we are trending down, right? We have a high, lower high, lower high. Lower high is right here. So if we start getting above that, that'd be a good sign. Back above the 50-day moving average, but it is declining, and we'd have to get back above 74 to bring in some real confidence to that. And it's more than possible. Let's take a quick look at bonds. So the TLT down today. 0.68%, right? Not even down a percentage point. Still coiling up within this pattern, but you can see it's acting as resistance. So if we break out, I think that this is going to be a really good play. I have a little position in the TLT. It's really just a safety play. It's nothing crazy. If we start breaking below the 50-day moving average, I think we go and test this lower trend, right? It's been going up since May, right here, mid-May, and it's been putting in higher highs, higher lows, and now it's consolidating a low, a high, a higher low. Oh my gosh. A high, a lower high, a lower high, a high, a higher high, right? So it's coiling up. It's going to make a big move, and when it makes a move, we got to be ready. How far can it go? We'll measure it from 152 to around 144, right? So $6, $7, $8 move, right? So if it comes back and coils up, when it breaks out of this, we might be able to see a full measured move of either to the downside $8 or to the upside $8. How do I know that? Well, I just measured from the top of this pattern, right? 152 to the downside of this pattern, 144. And that is what I am looking at as of right now. And you take a look at the TNX, that's bouncing from the lower range of this potential bear flag. And that little hammer candle suggests, hey, we might start bouncing back up. And if we start bouncing up, well, that doesn't do well for tech. And if the TNX, once the 10-year yield starts rising at a rapid rate of change, well, then that puts pressure on the big tech stocks. And the tech stocks is what's been holding up this market. So what does that mean? Well, we would need the other stocks that have been beaten up to start performing to, make the market consolidate. So it might not just, be this rapid sell-off. It could be, but that means chances are if it's a rapid sell-off, we'd see sell-offs across the board. Meanwhile, we have a lot of stocks have been completely just obliterated in stealth bear markets. And perhaps if we start seeing this run up, well, that might suggest that we might start seeing plays in various other stocks, but yet the mega cap stocks might be taking a breather. So that's something to watch out for. I mean, I pointed out Amazon 4 or 5 trading days ago, maybe even more than that, and that thing was way oversold, and we've been seeing that thing rip. So of course that's going to help out the overall markets when you have stock like Microsoft, Apple, and oh my gosh, what did I just say? Amazon, Microsoft. Oh yeah, Amazon. Yeah, those big stocks playing. Now let's hop into gold really quick. BP GDM. This helped me identify. This is very just like the BP SPX chart, right? It's the gold miners bullish percent index, and you can look at this for oversold and overbought areas. And well, it's I wouldn't say panics here, but it is pretty low reading. When it gets to 25, that's exceptionally low. Last time we were there, well, we ripped from 30 to around 40, just under 40 on the GDX. And the GDX is looking pretty good right now. I mean, it's questionable, obviously, because it's in a downtrend. So you'd be fighting the wind, right? It wouldn't be at your back right here. You have a high, a lower high, a lower high, a low, a lower low, a lower low. But recently, since August, it's been bottoming out, and it looks like 33 is a very strong area to try to get back above. Why? Well, it acted as support here and resistance here. Now, why am I pointing this out? Well, we saw this big pull of volume, something that we have not seen. Looking back to the chart, right? We haven't seen that type of move, and now we have some inside trading candles, right? So this to me says if we start getting above this candle high, 32.80, let's call it, or even let's just say 33, hey, we might start seeing some momentum in gold, miners, and the price of gold, which would tell me that potentially the dollar would fall. But if the dollar falls, it's also good for equity markets. So there's a lot of confusion going on right now at this point, if you can't hear that in my voice. Well, gold broke out of this downsloping trend line, and that's a positive sign. That's bullish, right? And today we were up slightly, right? It's digesting from this pull, but really we need to get above 1840. Hey, we need to get above 1840 to feel more strength here and more confidence. We're not there. Could be just some significant dead cat bounce where we go whoop, right back down. But as it stands right now, consolidating sideways, broke out of the downsloping trend. Next target, get above 1840. That's what we need to do. Why am I talking about this? Well, because gold is starting to perform stronger than Bitcoin. Okay, Bitcoin's falling, gold is rising. When we take a look at this sell signal, buy signal ratio that we put together in strategy, if you haven't watched that video, watch that video. If you don't know what I'm talking about, I'll try to remember to put a link in the description or the link in the video, okay? Well, when the sell signal is triggered, it falls, the rate of change between Bitcoin and gold on the weekly time frame, the 4-week rate of change crosses below 0. And now it's been heading down from the 24 point here since mid-August, early August. And now it's looking like it might be crossing below zero. Does that mean panic, sell, the market's going to fall 50%, Bitcoin's going to fall 50%? No, that's not what this means. Can it? Has it? Yes, and yes, okay? But that's not what this means. If this crosses below, what I do, first off, when it crossed above, that was when we bought, right? We put a buy stop order in. I told everybody, like, this was buy signals activated. Bam, 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 right? And we've been holding it ever since. We're still holding it. Great trade. And this might not trigger. This might turn right back up, and then process continues. However, if you follow that strategy, well, if it crosses below zero, the sell signal is triggered. That does not mean sell. The strategy suggests once the week comes to the end, really, you want to put a stop loss below the week and or the previous week, and then if the following week closes below, or not closes, but triggers that stop loss or goes below it, then that's when you get out. Because that means there could be some more momentum still to the downside where gold would be the safer play in that time. Is that going to happen here? I don't know. This looks like it's going to start crossing down through zero. That means that the sell signal would be triggered, it would be activated, and a stop loss would start going into play here at the end of the week or going into the next week. Okay, so that's something to watch out. It might be triggered ahead of time and you could potentially see a whipsaw. That's always possible. But if the sell signal is triggered, what do you do? And if you're stopped out, well, you wait for the next buy signal. Okay, it's not a prediction, it's just a strategy, and I'm just following it with a small account. Because it's fairly new, right? It's fairly new, and it's been quite powerful so far. So let's pull up Bitcoin. Bitcoin broke out of this range, right? Everyone was looking at this range. It broke out, and everyone's now making millions and millions and trillions of bazillions of dollars on pet rocks and tulips and all kinds of weird, cool things that I don't understand quite yet. But I want to learn, and I need somebody to talk to about it, because I look at all this stuff. I can't tell whether something's a scam or if they actually know what they're talking about. It's a very difficult market to navigate because I just don't know. But it's some interesting stuff. Yeah, so as I see it right now, the price of Bitcoin, as I rattle off, we're right above the 200-day moving average. I think if we start cracking through that, yeah, we might see some more downwards pressure. Where can it potentially go? Well, 42,000. That sounds like an area that can pull back to, right? We broke out of this. Well, first off, we came up strong. It acted as resistance. We came down. We broke out, and we haven't back tested it yet. We've seen Bitcoin break out of patterns before and never back test it. That's totally fine too. But if I'm looking for a key area on a technical basis, I would say this previous resistance, pulls back where the 50-day moving average is. That to me looks like a quality setup. Is it going to get there? Like I said, I don't know. This was a pretty weak day right here, and then was followed through by weakness. It's almost like it's putting in, a high, a lower high, and it's kind of just walking this cliff right here, where if it does crack, it can crack and it can show some aggression to the downside. So be mindful of that. There's also some, this is such a volatile, it's so volatile, right? So 44,000 is also an area of support. And if that cracks, it could be this zone right here where we might see a spike down and then poof, you never know. We might have dip buyers just come in like we saw here, right? Rip, and then it shot right up. All right, everybody. I rattled on, kept this a little bit longer than I wanted. No, it's not the end of the world, but I wanted to map out some key levels in the S&P 500. Just to recap, that is right here at the 50-day moving average, lower Bollinger Band. That syncs up with a lot of other EMAs that we've been kind of paying attention to. Like I said, the 100-day moving average. And if you look at this, the 5% correction will bring us to right around the monthly 5 EMA, which would make sense. And then from a quarterly standpoint, that's 4,000. So if we start getting some serious panic selling, that would be the area that you wouldn't want to miss out on that one, because I would imagine that we'd see a pretty significant bounce from that area, because when things go into a bear market, right? When things transition to a bear market, the biggest rallies are for the bulls, right? You'll see it'll get beat down, but then you'll see this monster rally to suck more people in. Then all of a sudden it'll get beat down, and then it'll rally right up. And then when you look at the chart a year later, you're like, hey, it put in lower highs and lower lows. That's all I got for you today, everybody.